What is going on?
Ooh, baby.
Whew. Here we are, Friday
What's going
night.
on, man?
What's going
Oh
on,
yeah.
dude? Some two
I
dudes.
mean,
Yeah,
what's
go
going
ahead.
on is Nebius is up 17% today. That's what's going on.
I don't even know how to explain it, but it's pretty bad. It was pretty bad this week. All in all,
Dude,
it was all that. I even gave it the title. I was like, all that just then flat. Like it's it's like
it's
nothing happened,
insane.
basically.
Yeah, it's insane.
Let's see here. Wow. So I'm going to bring up the markets right now,
Cool.
and
Yeah.
this is just a quick live stream that Nate and I just threw up, and I even extended out to a few people in case they wanted to join. But we're going to do this for like about an hour, just hanging out, just casual, just talk
Yeah.
some stocks. I threw four stocks out there that I thought would be a good topic to discuss. Of course, we're going to talk about the macro on the markets too, because what else is there to talk about, right? We're going to hit up
Mm-hmm.
Pagaya. I actually want to hear your bull case in that one. I know you were saying you got the earnings on Monday with that.
Yep.
Zeta, Nebius. Nebius is going to be reporting next week. And finally, we're going to just talk crap about him. It's probably for
I
a good 15 minutes because,
was
like,
gonna
what else is
say,
there to do,
yeah.
right? What else
I
is
mean,
there to do?
do we start with hymns? I feel like we should start with hymns, or do we save it
We
the best for last?
We could start with him. No, that could be one of the first. That's not the best. That's definitely not. Even if you're joking around, like, no, that's not the best at
it's
all.
it's the most
Best at all.
enjoyable to just sit here for 15 minutes and just pound the table.
I
Um,
I feel kind of bad. I feel kind of bad for people who
it's been
bought like when it
rough.
was really high up there, right? So this is the minute chart. I mean, this is the 15-minute
Oh,
chart, and
oh,
it's just horrendous, man.
it's brutal. I mean, I'm glad personally that. So I've owned this name for context. I've owned this name since 24 in August.
Yeah.
So I bought it initially like 15, $16 a share. Actually, around 12 a share, and average up to 16, and then average up to I think mid 20s. So I technically sold out at a loss. But throughout the year, throughout this like 18 months, Hims premiums are unbelievable during that time. So I made way too much money on premiums. So I probably squeaked out a profit on it. But yeah, man, I mean, they dropped the copycat Novo pill yesterday, and I
Yeah.
immediately woke up and I was like, what the heck is this? Because my main thesis was, okay, we had the GLP-1 fiasco last year with Novo, where literally last April, partnership with Novo, the stock shot up quite literally like 40% in a day. It was insane. Um, and then about 3 weeks later, the CEO gets fired, a new one gets put in, and the partnership ends, like within that week. And so that shot the stock down another 40%, the opposite direction. And there was some sort of back and forth between them and Novo, and there was some concern, but it didn't seem like Hims really hammered it. And so I was like, okay, I was a little upset about how it went down. Um, and then we see this, and they come out with, they literally called it. I mean, it was literally called the Novo Nordisk copycat. And I was
Yeah.
like, you guys
This was
are
yesterday.
asking, yeah, you guys are asking for trouble. Like last earnings call too, for context, they even said they're quote unquote in talks with Novo, which to me was a little bit of a yellow flag of like, what does it even mean? Are you trying to just pump the stock? Like you're in talks? I'm sure
Mhm.
you're in talks with all the big pharma companies. Um, but yeah, then they come out yesterday and quite literally release Novo Nordisk. Hey, what's up, man? Copycat Wegovy drug, and it doesn't have Novo Nordisk's snack patent, which allows it to be digested in your system and actually be reliable. And so I was like, so they're selling a less efficacious copycat drug for only $100 cheaper. What is to me? It just seemed like desperation. Like they're just trying to hammer GLP-1s because they need to grow. And so I took it as a thesis breaker, and I sold out and immediately cut losses at like 23.50 a share. Um, and so yeah, man, it was crazy. And then we see Novo Nordisk say they're going to take legal action, and people are like, "Oh, sure, you said this last time." And then within 12 hours, we see the FDA is
Mhm.
literally laying the hammer on Hims. And so we see now again, as you just showed, it was down like 12% after hours. I mean, it's been a crazy 36 hours as a Hims holder if you have been one. But I'm glad I'm like we were talking a little before we got on. Like I'm glad I cut ties, and it personally, selfishly, I'm glad it went down 25% after I sold, because it makes me feel like I made the right decision.
Let's see
But
here.
Have you ever owned HIMs? I don't know if you've ever.
I
Have you ever
did.
like swung traded it? Okay, or swing traded it
I
before?
did. So it's down 15% after hours at the close. Actually, the close would be 4 o'clock. So that'd be like on this candle right here.
Mm-hmm.
So yeah, so my story with him was that it's weird because like when I start a position, it's usually like a starter, but it seemed like this was like back a while ago. This is like over a year ago. So if I go all the way back here before it blew up, yeah, like right here. So I basically opened a spread on this. So I opened I remember I got like the $20, no, the 2035 spread expiring in 27. And I got most of it, and then I sold those spreads obviously too early, and then I converted them to shares. So like that's usually what I do. Like if I see a lot of upside, then I buy the spreads, and I usually like take profits on them and convert them to shares so I can kind of ride the wave. And I was holding it, and then I sold. Like I kind of just traded around it for the most part. Made decent money off it, not like banger money. And to be honest, right when I sold, because this was tradable. This is very tradable over here. If you look at some of the moving averages at this time, like this is just tradable.
Oh man, that's what I mean. Like the covered calls
right?
and the cash secured puts were so juicy. So I was trading a bunch. At playing the volatility, like you said, the deltas were like insane.
Yeah.
I remember there was one earnings where I think it was Q2 or Q3 of last year. It was shooting up pretty quick, and like the $100 strikes when the price was $50 were selling for like, the $100 strikes were selling for like, I think a $2 a contract, and it was 2 weeks away. I was like, you think it's gonna go up double?
I remember that.
The premiums were insane, dude. So I kind of play like you, like I held my shares, but collected premium along the way. So I held it through that entire, as you can see, those tranches.
This is very tradable right here. Like this is just this is classic 200-day, 100-day moving average. Like this is just very tradable. But I got out. So it made this move, and this was like I got out of it, because this was like the time, and I got out around $57. I think it was like right here I got out the end of the day, and then this happened, and I avoided it. But it was a trading position, so it wasn't like massive. But this from here to here was just brutal. From here to here, like I've noticed that a lot of the crowd got turned off because this was like when Andrew Dotum said.
Yeah, he basically literally the top was the green candle. He put the eye emoji on Antonio Linares. I don't know how you pronounce his name. About like the short sellers are screwed or something like that.
I know.
And that literally marked the top. And the reason I hate that too is he had literally a planned sale the next day.
I know.
So it's like, dude, like what are we doing here? Come on. What else, Amit? How you going?
Hey, if he wants to come on, you can come on. I'll send him the link in case he wants to join.
But yeah, dude, I mean, it was ridiculous. And people were like, oh, they try to do the comparable of, well, Palantir insider sell or other companies insider sell. But it's like, yeah, but they don't go on Twitter and do the eye emoji on a guy that talks about 1,000x in their stock every day. It's just not the same thing. And then the next day is an insider sales planned. It just looks bad. Now, I personally, honestly, I was dumb and I should have taken those early warning signs of like management's a little sketchy. I didn't sell. Obviously, I wish I did. I wish I sold it in the 40s and 50s. But what can you do, right? It's hindsight bias. But I'm glad that I already sold. So.
I mean, it's fine. Like I feel like a lot of people give like crap for people selling, and honestly, like some people sold out of PayPal, and that sucks. Like I've been there. I've backheld stuff and sold it, and I do it sometimes. Like I'm doing a Grab. I'm holding the bag with Grab, and it's not working.
I'm holding the bag with Grab too. Thanks, Amit, for this.
Oh, you're holding the Grab? You're holding the bag?
I have spreads. I'm holding the bag. Yeah.
I actually
50%.
I'm the one who kind of gave Amit the idea of it. And I have no problem saying it now because the stock is all the way down. Before, like I just felt weird saying it, being like, oh my God, I told Amit about it because I was talking to Chris about it a lot and stuff. And I think I did a pitch on Amit's show one time, and Yeah, it ran at like 650, and I would have never guessed it
Oh,
would
I
be
remember
back
that,
down
man.
here for something.
I,
It's like I just would have never guessed, but it kind of makes sense because Uber is down here too. Uber fell back too, right? So I
yeah,
think they're both going
similar.
to kind of trade in sync with each other. Like if
You know what's
I,
funny is Grab is sorry to cut you off, but Grab is I went to Singapore and I used Grab,
yeah,
and so it was when Amit first brought it up. I remember like I think 3 months before that I used Grab and I had a great experience. It's very similar to Uber. I know they have a lot of businesses like financials and things of that nature, but I was like I like this thesis. I think it's a good name, and I think honestly it's ridiculously undervalued. And I don't know why it's here, but it's just I feel like we're just in a market for the past 5 or 6 years where like the market really to have a stock to run cares about story. And I just don't think
it
Grab
does.
to me has a story. And so that's just why it's just not moving the way it should.
Uh-huh.
But yeah, man. I
Yeah,
like Grab. I like the name.
I'll tell you what it is in a second, or at least what I think it is. But this is the line chart for Grab and Uber, and just look at this.
Oh wow,
It,
yeah.
it's a
Interesting.
positive correlation, right? So if Uber
Yeah.
goes down, Grab is going to go down, and ultimately that's what it is. And I think it's just a ride sharing business. Like I'm sure if I add Lyft to here, it's going to be the same thing, right?
Yeah. Interesting.
Oh, where's Lyft?
That's a good point. I mean, it's similar. I'm sure we'll see if we talk about later. It's like Nebius, Iron, Cypher, Wolf,
Oh,
all those
that one's
guys. It's like the
easily
most obvious
comparable.
Core Weave. I mean,
Yeah, easily
yeah.
comparable to those. Actually, well, actually, hold on. Let me share the fiscal AI to talk about Grab. And
Love fiscal.
I think this is the reason why that stocks go up and down dramatically, and I think it has a lot to do with acceleration of revenue and profitability.
Yep.
And let's see here. So this is fiscal AI, and if I go to Grab on here, I go to their financials, right? And acceleration, right? So Grab
Right.
is just pumping. They're bringing it every single quarter. Like they're
Yep.
doing what they're saying, and whatever. If I bring up the total revenues, we had like slight acceleration. Actually, I got to take out
Yeah, check
that.
out the past. Yeah, it
Yeah.
makes it look worse.
Okay, so I know that always happens whenever you talk about like smaller revenue,
Yeah.
larger numbers, and I think the issue is that the market sees like around 20% growth, and they're just
Yeah.
not. It's just not exciting to them, right?
What's the
There's
forecast? So what's the future quarter
Oh,
showing? Let
okay.
me pull up for it.
So use fiscal AI as well.
Yeah, I love fiscal. I
Yeah,
love
I
it.
know it's great. Yeah, look at the forecast.
Okay. Yeah. So they're
It
just
doesn't.
basically like,
It's not
oh, it's flatlining
accelerating.
around. Yeah, exactly.
Yeah,
Yeah.
growing, but it's just not accelerating. So then, what else we need to look at is profitability, and I usually look at operating income.
Yep.
So if I go to, am I not? Here we go. Operating margins.
Yep.
Okay. So yeah, they're expanding, but like it's not like outlandish
Right.
expand. I think I got to do operating income in order to see the forecast for it. And it doesn't go that far out. Then it's probably EPS.
Yeah, but yeah, like you said, as we can see, like it's nothing crazy like a Hood or
Yeah.
Palantir or Hims when they were really running. It was like massive revenue and expansion.
Yeah.
So I
We
think
haven't
I
brought up
think
the
it's
guy
fair.
yet. We haven't
Yeah, we
brought
haven't
up the
talked about
guy. We're
Pagaya
going to
yet.
talk about that. Yeah, I want to hear your story in that one. But I mean, this is the reason why. Like the market is just not crazy about it. And
Yep.
we don't have to go too much into Zeta because we talked about it a lot.
We've hammered
But
this one, yeah.
this is the reason why I'm bullish Zeta is because their estimates are increasing dramatically, right? Like look
Yep.
at these EPS estimates. Like this is very quickly, and I don't even need to get into revenue. But if I do, then like the revenue accelerates. They guide it for 35%, right? And that's a massive
Yep.
acceleration. So like that
Yep.
is much better for the market to perceive than
And also they
Grab.
have like Athena with AI and just like that's just more of an
Yeah,
exciting name and it's more of the bucket of stocks that are actually getting some value now.
they're part of the
Um,
secular trend, right?
yeah, exactly.
And the problem is they're getting killed by the software issue. Um, there is one stock which I'm like really surprised how low it's going, and even the underperformance today is just crazy. So let me do the bar chart here or the candles. So IGV is one that's just getting killed.
Dude,
And
I
this
tweeted
isn't
about this yesterday. So, fun fact, the drop we've had in the past month has been more steep. Get this, more steep than COVID, March of 2020. So March of 2020, we dropped 20%. You look here, we dropped 22 to 25% in a month. It's been more steep than COVID. Insane. Off of no news.
yeah, 27%. Yeah, that's insane.
Dude,
Yeah,
off what? Off what? Like what? Nothing.
just fear,
Nothing.
just straight up fear.
Like
I
literally
mean,
nothing. It's insane to me.
It's getting bad. I mean, I work in software. Like, it's not gonna
It's not gonna
cannibalize software. In fact, it's
No.
actually good for these companies too, right? Like, they're gonna figure it
Yes.
out. Yeah, and
Yeah, man. It's so ridiculous. I think there's so much alpha there. Like
yeah,
that's why
look at
I'm like
this.
Zeta's my pick. But yeah, ServiceNow. I mean, some obviously there will be some names that probably get their lunch eaten.
This is not
but
one of them.
no, ServiceNow 50. I didn't realize it was 55%. My God.
Yeah, this is not one of them. And
Wow.
I'm not long it anymore, but it's just, this is insane. You know, if you look at, I mean, this is another one where it's like Bill McDermott, the CEO, is executing, but it's not like outlandish growth. But they have such a monopoly over everything, and they're already profiting off of AI too. So it doesn't really make sense, you know, why this would be a cannibalizer for AI. And yeah, the margins are going up too. You know, it's not like they are already profitable and they are expanding profitability, which doesn't really make sense.
Yeah, and
But
it's
yeah,
like
the chart looks like Microsoft. It kind of does.
And then if you go to, okay, AI is going to eat, software lunch. Well, then why is Palantir down? Why are the AI infra and the big boys down? It's like, okay, make up your mind. Pick one.
Arguably, this isn't that bad, right? 33% is a
33%.
lot, but then
I mean, yeah.
Then look at that, right?
Yeah, you look at that. Yeah.
It's not that bad. Like, ServiceNow has went nowhere for 2 years.
Snowflake's another one, but Snowflake's leaps and crap loads, a little different.
Yeah, Snowflake is pretty bad. They're not even close to profitability. So I think this one deserves it.
God, I remember the early days of 2022, if Amit's still here, where people were comparing Snowflake and Palantir.
Yeah,
I just love looking back.
That was funny.
Yeah, man.
I thought that was funny.
You goofballs.
Yeah. I was a Snowflake bag holder, and then the market gods saved me. They saved me. I didn't expect it to happen. They saved me, and I got out at like $220.
Yeah.
And I missed this, and it's just, there's better names to be in. There's better opportunity.
Yeah, man. I think it's honestly making me consider getting to more software names. Like, I obviously have Zeta, and that's sort of my software play for the next 12, 14, 24 months. But seeing all these names being sold off, it's like, I just don't get it. Like, I also work in tech, so I work with SMB platforms like HubSpot, Salesforce, Adobe, and other software plays, and it's just like, guys, AI is not getting their lunch. I do think, Salesforce does have some problems that they're going to face, but that's not going to be for another at least 3 to 5 years. Like, Salesforce will be fine. They're well positioned. They have so much capital, and they're just a juggernaut. Now, I do think and let me know what you think, but I do think the software world is going towards, like, they hate seats and licenses. I'm seeing more and more distress from SMB clients, so they're just so sick of licenses and so sick of seats and that sort of pricing model. And so I do think Salesforce is trying to actually navigate out of that with basically credit spend, so pay as you go, just like the cloud compute companies. And so I'm seeing early signs of them trying to navigate out of that. And I think the companies that stick and die with this seat model and license model will die longer term, but we have a while for that. It's not going to happen within the next year or two.
Yeah, so there's SaaS-based models where they're based on licenses and seats, which is what you're talking about. And then there's consumption-based, which could be consumption based on storage, or it could be consumption based on queries, tokens, and so on, which is, I mean, right now, with OpenAI and stuff, you can basically pay for membership to access certain models, priority of accessing certain models when rate usage is high, and then tokenization, and then the number of tokens you can get for API queries and everything, which is from the business standpoint. The consumption model makes a lot more sense, because then it's like, there was a point with a lot of products where you're just buying a license, right? and you get like a license to install Snowflake in your computer, and you'd have like 100 employees, so you'd have 100 Snowflake licenses, and then these companies started using Citrix or virtualization to basically install one application on a server, and people would access that one server internally or on-prem to be able to use it. And then they started to see that, so then they started switching to a consumption-based model, especially when it got into the cloud, where Snowflake was storing all of their data on their servers. And it made more sense to switch to consumption-based model because people were just loading up all this data in there. But I think Snowflake's demise is that now people are storing their data in AWS, Google Cloud, and whatever, and they're just running processes on Snowflake. So like Snowflake is changing their model to process-based. So the amount of processing power you use in Snowflake is what you get charged on. And that's ultimately where a lot of these companies are headed, like MongoDB has been doing that. ServiceNow is not consumption based, but their AI is consumption based, right? So they're able to profit off that. Salesforce is obviously the juggernaut, where it's like these big companies are installing it on prem. I don't see the bull case with Salesforce. I just see a value. Yeah, it's just value trade, but that's really it.
Yeah, 100%. Like Salesforce's tech was great in 2016, but in 2026, and I use it every day. Agentforce is like their big, sort of what they're building their next 5 years of growth on. And look, guys, it is bad. Agentforce is not good. It's using their system was built in 2005 when there wasn't any sort of even thought of AI architecture or architecture for the products they're bringing out. And so now they're trying to put on top this AI product that with a system that's just not used to it and is not worth it. And so it's just not good. Like they market it as, and their AEs really market it as like this, both you just put it on, click a couple buttons and it works. It's going to save you time. No, I build it. It does not work the way it should. It takes way longer than it should. It's way more manual, a lot more testing. And there isn't a transparent pricing structure. So like people are getting charged a lot on the credits and the queries that are being pulled from it.
Are you in sales?
No, so I'm a implementation consultant.
Oh, okay.
Yeah. So I'm on the delivery side. I do want to get into the front end. I want to be like an SE. But yeah, man, it's just not good.
So you're a product manager.
No, I wouldn't say that. Yeah, in a sense, kind of. Okay. Yeah. But yeah, it's just not good. And their marketing sucks, which is why I like Zeta. I agree that I think there's value for Salesforce, but there's not some sort of technical moat. They're not in some sort of innovative company. I mean, last year they acquired like 9 companies or something insane.
Yeah.
So it's, to me, but it's, again, they're so entrenched, sort of like a Windows, obviously less so, but in a similar mind space of just like every single SMB that wants to do any sort of front-facing sales has Salesforce. And so they're so entrenched, it's going to take a long time. But I think, their days are diminishing for sure.
Yeah, I mean, Mark Benioff, they said that they were going to stop doing the M&A. And this was when they were trading around like $300 a share. And the market liked it because it was like, okay, so Informatica is going to be like the last one you're going to do. Like the market just outlandishly hated the Informatica acquisition. They just didn't think it was worth it. Before that, they acquired Tableau and a bunch of other companies, just expensive acquisitions and just inorganic growth, right? So I guess the problem with that is that if you have to buy your growth at a certain point, you're going to be hindering on your profitability because you're spending so much money to create the growth. And because it's inorganic, there's no efficiency there. So you're just going to be spending more money. And I remember the market hated the Informatica acquisition. They got used to it, whatever, and it finally finalized and whatever. That was good. And then when they started acquiring again, it was like, this isn't going to end. Like this company is dead because they need to acquire the growth. And I don't see that really working in the long term because you're going to go more into debt and you're going to start hurting your profitability, which is actually what's happening to them. They're starting to hurt their profitability portion. And that is, I feel like that's a losing game and it's not innovative. Like you're not ahead of you're already proving you're not ahead of the curve because you have to buy it.
100%. Yeah, 100%. I mean, like, don't get me wrong. Mark Benioff, I think, is one of the best CEOs in the past couple of decades. But he's good at running CRM, and that was innovative for its time. but we're in a different time and they're
Yeah.
falling behind. And so that's why I agree. The acquisitions to me is just like a wake up sign that they're desperate to grow and to try and compete in any sense. But yeah, that's my take on Salesforce. Even though I work with it every day, it's still just, it has some really good things about it, but the future for it to me is not there.
Yeah.
So
I've used it, and it's only a matter of time till you see competition. Competition already came, and the problem is that, like, why go with Salesforce when you can go with something else? And a lot of these big enterprises, like, you're locked into Salesforce. You can't really get off of there. It's going to cost more for you to get off that and just keep the license seats. Well, then they're figuring out ways to do it.
With AI, like the switching costs are going to become cheaper and cheaper. So being able to migrate all of the data over is going to be even cheaper and cheaper. And so the switching costs will be easier for companies, because that's really transparent. That's a big reason why people even keep Salesforce, because it costs so much just to migrate all your data over, to migrate everything over. It costs hundreds of thousands of dollars usually.
Yeah.
And so the switching costs are too high versus the low five figures a month to keep the licenses.
Yeah.
But when we get to a point where these companies, these orchestration companies, can come in and migrate for $50K, $25K, like, they're going to do it.
Yeah, that's what these smaller companies are doing. They're willing to work with you. The enterprise, you're stuck with it, but then you're starting to reduce the amount of seats, and that's where it's going to kill you. Hey, you got yourself a fanboy over here.
Yeah, this is the one I was telling you about. Me, him, Amit, and Davis were always
the one.
This is Bailey. Yeah, both him and Davis always are fanboying me. I don't get it.
That's funny.
They're always
just spamming on your channel right now, and then he's asking for troubleshooting too. You want someone to troubleshoot his stuff.
That's a bot. Actually, let's get him banned, guys.
It's a bot.
It's a bot. It's a bot.
Oh, it's a bot. Oh, okay.
Yeah, I mean, he's a thought too, but
him's the 100.
Oh,
I hope so. I hope so for your sake. I don't know.
If you hold it, Elixir, I hope so for your sake, dude.
I mean, they could come back. Yeah.
A part of me is like, if this GLP-1 gets resolved, like, let's say, the FDA just forces HIMSS to pay a couple $100 million or something, like, I might go back in, because maybe HIMSS learned their lesson, but we'll see. I'm just sick of them trying to play with big pharma and the FDA. It's like, all right, guys, come on, move away from GLP-1s.
I really think the issue here is no longer the HIMSS, no longer the GLP anymore. I think the issue is starting to become its platform, because now Amazon's getting pretty big in this sector, which wasn't really a big deal before, but now it's like, oh, they're partnering with a lot of companies like Row.com and everything. And like, Row.com has one of the I forget which sister is on there, one of the tennis sisters. That's like the
Serena? No, it's
Serena, or it's Venus.
I think it might be Venus.
Yeah.
I feel like Serena might be too expensive.
Like they're cranking up on their on their marketing. So it's like, and it's being competitive, right? It's starting to lose its edge. They have all that data, which was my arguing point for HIMSS, but it is just, you've lost the trust.
Yeah,
it's very difficult.
Dude, you're gonna make me rant with this management team. Yeah. I really feel like Labs, where they should have put all of their growth into. Labs is to me, would create a real moat. So, like, obviously, like you said, data is the moat here. And so Labs is really, to me, like the flywheel effect they can have, sort of similar to a SoFi and other names, where like, oh, we've noticed that you have these 3 diagnostics. We can bundle X and Y things, bundle it for $5 more a month, whatever. Like, that to me was the moat. But it just pissed me off when they decided to go down the GLP-1 again and try and force it, and especially when they call it the Wegovy copycat. Like, what are we doing?
Yeah, I know that was a bad idea, but I mean, I guess I could use that kind of segue a little bit to Zeta, and then we can move on to Pagaya too.
Yeah.
But Zeta, this is the thing, right? You're catering to consumers, right? So you need to market in order to get your growth. At least like with Zeta, they're focusing on enterprise. So small business enterprise, mostly it's becoming enterprise now, which is great, is that you lose less of that volatility as far as retention goes. And on top of that, you can start to charge more, and you will keep them as long as you start delivering. Like, if you think about like with HIMSS, it's like, how much of this labs like is really going to matter, right? Like, you want to buy your GLP-1 in there, you want to buy your meds in there, that's fine. But I think the problem is that, and it's funny because this was actually one of its strengths before, but this whole market has become so saturated that, that it becomes more of like who's screaming the loudest or who's advertising the most.
Yeah.
Will win. But yeah,
100%. Yeah, I think. I mean, it'll be more than labs. Also, there's just a lot they can do with it. Like they could have done testosterone replacement therapy. They could have gone down a lot of other routes and offer a lot more product offerings, and really keep like that health first approach. But yeah, they're really trying to just pick these battles that to me are going to lose and just causes a lot of risk on the stock that I just don't feel like owning. Like if they're going to keep poking the bear with Novo, I thought they were done. Like it's just why hold a name when I know there's lawsuit risk.
Yeah, we got someone in the backstage.
Who joined?
You can't see it?
No, I can't see the backstage. Who joined?
All right. Well, I think we might give you some licensing rights because this guy is beautiful as hell. I'm about to bring. Oops, hold on. That was late. There you go. What's going on, dude?
What's
going on, man? How's it going? Sorry, I'm late, gentlemen.
No, that's all right.
Yeah, I was in the midst of recording a video. I only saw your text afterwards, but how's it going?
How's it going, dude? I didn't realize you were recording a video. Thank you for coming on. It's good to see you. This is my first time streaming with you.
Yeah.
Has it really?
Yeah.
You never jumped on a stream with me either.
Well, I mean, I don't jump on too many streams in general, but I'm happy to get this going. So
it's true. Actually, you do more of the recordings.
Yeah.
You post a lot of content and stuff, and you put it on there. But
yeah,
how does that? Okay. Well, actually, first, if anyone doesn't know, Arya, he used to be Quality Invest, but he has actually. I'm going to post your YouTube channel on here.
I appreciate it.
Just so you have it. But yeah, Arya does a lot of content on value investing. Might become an Uber bag holder. We'll see. But I mean, you called Uber, but I am honestly surprised how it's back down here again.
Yeah,
it's getting a little like I don't know. I don't know how this falls into the software cannibalism when it comes to Uber, because Uber is not. That's not the case, and I don't know if there's fear with Waymo, Avride, whatever there is, but like, I don't know why this stock is getting sold off. So yeah. I guess you might be able to enlighten us on that. And I got to pull up a YouTube channel.
I still think no, dude. Honestly, I still think it's just the AV fears. And if you get a chance, I highly recommend it to everybody, both of you and especially the audience. If you can read through the supplementary slides that they shared, it is so unbelievably insightful. The charts that they share, they had this one in terms of. Thank you for that, by the way. They had this one in particular where it's showcasing that in the markets that autonomous vehicles are implemented, the rider or the drivers that are coming on, it actually accelerated. There's growth in terms of new drivers. So when you implement AVs, the total number of drivers, the growth of that is accelerating. The same thing goes for riders. So it's a TAM expansion thesis. The total pie of rides is going to expand as autonomous vehicles get implemented. There's slides on that. Additionally, obviously, there's the whole argument of, it's a network effect business at the end of the day. So the autonomous vehicles that are listed on the Uber platform, they are busier than the ones that are not listed on the Uber platform. It's about a Waymo on the Uber platform is about 30% busier than a Waymo just on the Waymo app, right? This is, again, another chart that they shared with us. At the same time, the ETAs of those rides are faster. So a Waymo on the Uber platform arrives 25% faster. Anyways, man, long story short, AVs are not going to disrupt this business. Simple as that. No. If you just look at the materials the company shares, it'll become abundantly clear.
Let's see here. So I just brought up your channel on here. You post a lot of videos, not as many live streams, but like a lot of videos. I actually listen to some of these, just like kind of introduce myself. Only some, and then like,
only what?
Like,
yeah.
I'm not listening to this guy anymore. I'm done listening to this guy. No, but it's kind of different because like we do a lot of live streams. Like you have a lot of these type of videos, and actually Nate, you're kind of like.
I'm just vibing, man.
Yeah.
I'm posting more videos, but I'm also going live. I'm just figuring it out as I go. Yeah. What I like to do.
This was good. Shout out to you with ASML. That was a great one. That was a great one. Yeah, that was a great one. And now you're bullish Adobe still, or
no? You're back holding Adobe still, or are you bullish?
He's back. He's back holding Adobe.
You guys define it pretty interestingly there. I'm down 20% on the position. Am I even a hair more bearish? No, actually, I've become more bullish because I've researched the business more over the past couple of months, and it is abundantly clear to me it's not going to get disrupted. I've done these like 2-part videos on it, so I mean those are more in depth, but yeah.
That's cool,
Yeah,
man.
I think it's
messing around with you.
similar,
not serious.
it's similar to all software plays, dude, where it's like people think software is going to disrupt it, but it's just going to help these platforms, especially the ones that are innovative and have been a part of the game for a while, like an Adobe, like a ServiceNow, like plenty of other names. Like it's so ridiculous. And people think, oh, AI is going to disrupt software, but they also solve AI names. So it's just, okay, everything's being disrupted by something, but no one knows what it is.
Yeah,
it's
exactly.
like, sure, man.
Yeah, for sure.
But
Go ahead.
Go ahead.
Oh, okay. No, I was on the phone with a mutual friend of ours. I was on the phone with Nick, Wealthmatica.
Oh, yeah.
And
okay.
we were, I just released the video, but then he called me and he was kind of explaining like literally what I said in the video, where he's saying, I think we are at a pivotal moment where there's like essentially 2 buckets of software. There's those that on a spectrum fall more closer to like non-mission critical, and then there's mission critical software. If you're in the non-mission critical software, there's a bigger question mark in terms of, okay, what value do you actually provide? Can we literally replace you, whether it's a vibe coding internally using it at a company, or there's going to be increased competition, et cetera, and profits go to zero. So if you're, for example, a Monday.com, I actually quite like the business, but I'm just using it as an example. If you're a Monday.com today, task management software, not that mission critical, can probably be more easily vibe coded or otherwise be replaced. There's a bigger question mark for that type of business, whereas there's these other companies, whether it's a ServiceNow and Adobe, etc. I think those are probably going to be more solid in the age of AI.
No, I 100% agree with you. Like we use a project management software called ClickUp. There's Atlassian to Teams, or not Teams, Jira, Monday.com, like all those type of platforms. I'm sorry, I agree. Like they're not mission critical. No. They're easily not easily vibe coded, but they can easily be, another offering of these big conglomerates like a Salesforce and other companies. He is mogging, by the way. Just gotta say that.
Sam, I already know what you're pulling up.
I literally looked up what the hell mogging means.
I'm so old.
I'm so old, dude. Actually, when David said in the chat before, I was like, what does mogging mean, man? I'm an old fart, man. I don't even know what that is. Yeah. I'm still trying to make sense of it.
That's hilarious.
I don't know if you saw, by the way, I finally opened the ServiceNow position today. Small.
Oh, that's good.
Nice.
Yeah.
Nice.
Yeah. I mean, we were just talking about that earlier. That is a mission critical application. You cannot go down with ServiceNow in your organization. Fortunately, that's in the cloud, so being down is less of an effect. But there's actually an interesting name that's becoming interesting again is Cloudflare, and their chart is pretty bullish still, even though it's pulled back.
You mean the one that partners with Nebius? That's awesome. Let's talk about
That's right. That's right. They partner with Toloka. It's not that bullish on the daily chart, but the weekly chart, it broke below. Okay, so maybe not as bullish anymore. What about the monthly? Okay, the monthly's still good. But yeah, they're supposed to be reporting earnings. A lot of these software stocks are reporting earnings in the next couple of weeks. Next few weeks, actually, 2 to 3 weeks. And I don't know if a lot of people know about ServiceNow. They've been talking about it, and you're obviously bullish ServiceNow. And that's like something where it's like that's probably one of the most top tier software stocks out there, and they're profitable, which isn't too common in the software industry. Like Cloudflare is not profitable on a GAAP basis. MongoDB is not GAAP profitable. Snowflake's not GAAP profitable. A lot of these popular companies. Salesforce is GAAP profitable. CrowdStrike's GAAP profitable, but SentinelOne's not GAAP profitable. Like it is not common for a software company to be GAAP profitable.
Dude, it's insane how long they've been public but not profitable. Like to me, it's a part of me feels a little disgusted. Like I remember investing in Palantir in 2022, and Snowflake wasn't profitable then, and they just went IPO at some insane valuation. And 4.5 years later, they're still not profitable. Like, what are we doing? Are we just giving all the money to like the VPs and the executives to sell shares? Like what is happening?
Snowflake does buybacks, and you probably checked out the share count on ServiceNow, but they've been doing buybacks, and now it's getting to a point where it's like, well, now they're going to actually artificially increase their EPS at this point because of the fact that stock is cheaper, but also on top of that, because the buybacks become cheaper for them in order to actually do that. So that's pretty interesting. Also, Bill McDermott he's the CEO of ServiceNow, And
Okay.
I don't know if you guys know, but Frank Slootman used to be the CEO of ServiceNow. He was the CEO, brought them public, and he became the CEO of Snowflake, brought them public too. And he's part of the venture firm. And actually, there was the current CEO of MongoDB, or the new CEO, I forget if he started, CJ Desai. I believe he used to be in Cloudflare as well, and I think he was in ServiceNow as well for a minute. But I mean, these like really top-notch leadership teams, like they only work with like the best companies, right? And ServiceNow has a history of having a lot. Like the management's great. Like for me, I'm just not buying it because the chart just looks so bad. I can't buy it because it's just outside of my strategy to buy the stocks. But like fundamentally, like this is an amazing company to own for a long period. And I know that's your alpha, Aria. Like you buy companies when they're cheap and you will keep buying it. And that's great to have a young mindset like that because you are young. How old are you?
I'm 20.
You're 20. Yeah. I mean,
Yes.
I'm almost double your age. I'm almost double your age. And like, it's not that hard. You have the time. So it's like, why do you need to trade in that positions at that point? You just need to throw money at stuff that are great companies, just hold it. Right. So,
I mean, dude, it trades at 6 times forward EV to sales, and it's growing 20% year on year. Like that is not where that 98% customer renewal rate, that type of quality software, assuming it doesn't get disrupted, which again, we've already long established, none of us here believe SaaS is actually going to zero. This is bottom of the barrel valuations for SaaS. Simple as that. Right. So, I mean, my whole thing has always been like, I don't care about, sentiment and this and that and like holding through. ASML, I was down/flat on that business for a year and a half. It has rallied 120% over the past 8 months. This is just how it kind of goes with these sort of, I guess honestly, you could, I don't want to label them contrarian, but these sort of contrarian, out of favor, poor sentiment stocks. Google was another one. I sold that one, but I was an investor in that one for, I think since March of 2024. Sold that one at $295. But yeah, Sam, I did want to get your thoughts because I know you've complimented the CEO of ServiceNow before. I don't like the guy.
You don't like Bill McDermott? Why not?
No, he's a bit too many buzzwords, to be honest with you.
Like so he's one of the classic
AI control tower.
He's one of the classic software sales guys that love to just sell their.
Yeah, he's a salesman. That's his job. He's supposed to be a salesman.
No, but I agree with Aria here. Like I like the contrarian guys are the guys that like an Arcadia at Nebius where he like hates being an earning call because he just wants to go out and freaking execute. Or Alex Karp where he just doesn't care about selling his company. He just cares about customer outcomes. So I do lean with Aria here where like I prefer like the CEOs that aren't trying to like we're the best thing ever. We're gonna come with all these AI agents and AI and AI and AI and I'm not a big fan of that the salesy tactic. I get it, they have to sell. They have to sell their company, and that they're the best thing ever. But I do prefer over the long term a CEO that is more just customer focused and doesn't give a crap about trying to sell the company themselves. But that's my take.
I definitely think there's a balance to it. You can't have one or the other. I think a mix of the two is the best. I don't know how much you guys have looked into Dara, the CEO of Uber. But I think he is the poster child of like the perfect CEO in my eyes.
I like him a lot. Yeah.
He's so into like I walk away from every interview thinking like, oh, he gets the business. He knows every little minute detail about the business. And at the same time, there's a lot of humility in the way he talks. He's kind of my favorite. I don't like ServiceNow CEO because like that $10 billion market cap comment rubbed me the wrong way. At the same time, he got on Jim Cramer's Mad Money and he's like outright saying, yeah, I think the stock is undervalued, this and that. I don't love that, man. Like you should not be talking about the stock as a CEO. Go out, execute. The market will reward your execution. That's kind of my view on it. At the same time, I don't hate it enough to the point to not initiate a position, right? So,
yeah. Oh, that's interesting. I did remember seeing that. I actually thought it was really funny how he said that. But yeah, no, I'm not a huge fan of CEOs that comment on stock prices. But at least he wasn't bashing on short sellers.
Like Carp.
Yeah. Well, no, that's fine. I was talking more about Andrew Dotem. Using that as like a tactic to like get out and stuff. But I mean, that is a red flag when you have a stock plunging down and CEO selling. That's a red flag, in my opinion. But we haven't seen that. Fortunately, we haven't seen that with Bill McDermott. I mean, Bill McDermott is a salesman. I mean, his background is Xerox, so that was basically what they were doing. They were selling printers. And there was this interview that I read from him where it was just like, man, this guy's a killer out there. But yeah, I mean, that's software, dude. You got to be a salesman. And that's what makes the go-to-marketing team is to be able to just sell your product out there no matter what. But yeah, so let's talk a little bit about, I mean, since you're here, we could talk about Nebius, but I wanted to get into Pagaya because they're going to be reporting earnings on Monday. And I wanted Nate to pitch this to us real quick, and then I might have to bounce because well, I'm not like an official thing. Just like let me know what's up. But I might have to bounce in like less than 10 minutes.
Okay.
But yeah, let's go through it. Is this same link you already sent me?
No, I've sent you a bunch of ones of posts I've made of Pagaya in the past. Really, it's just like for me, it's again sort of a page of Aria's book a little bit where I'm a mix of I like growth, but I also like. It's like cut off a little bit. Oh, there we go. I like growth, but I also just like turnaround plays or undervalue plays. So if we look here, I just posted like Pagaya is at the time of this post. And actually now, crap, it's probably a $1.5 billion company. They're guiding to do, a 1.3 to 1.35 billion in revenue. So 36% growth. They just were GAAP profitable 3 quarters ago. So they're like a newly profitable company, which I also like, which typically means they're undervalued when they're newly profitable. Just because when they're not profitable, usually a lot of funds can't add them, and so they're usually looked at as more of a speculative name until multiple years of profit. I also love that they're founder led. That's usually the route I go. So these guys started in 2017. The 3 of them initially were doing I forget what, but they basically pivoted in 2022 to a business. And essentially what they do is they connect loan or people that are looking for loans with sellers of the loans. So like VC funds. Other people that can sell loans, but outside of the traditional metrics like FICO. So we obviously know with FICO, it's the traditional platform or the traditional way we go. They also look at like, oh, have you paid your rent in the past 6 months? What's the frequency of your car payments? Do you pay your credit cards on time? And so they use more of an algorithm rather than just the classic FICO, and they kind of take a fee in between. And so their fee is super seamless. Their APIs are super seamless, and they keep the banks and their partnerships. It keeps it in the UI, and that's my favorite part. So that to me is the moat. Where, as an example, they partner with SoFi and Bank of America, where you ask for a personal loan. SoFi goes, okay, let's run it through the system. Pagaya goes, oh, we've seen that they've actually paid their rent for the past 3 months. They pay their credit cards on time. The FICO traditional metrics gives them a credit score of 650. They're not viable. But actually, in Pagaya's model, they are viable based on X number of algorithm criteria. And so they keep them within the UI platform of SoFi, and they offer the loan, which keeps SoFi happy because SoFi's like, this is awesome. You give us more loans for us to sell. And it keeps Pagaya happy because they take the fee, they take the API fee. And they have a couple other things they do as well. But they just expanded to 36 banks. They used to be at 31. I know I'm kind of rambling here, but it's just, again, to me, it's just like an undervalued metric play. And I like them in the software space. So, and I think Nate, moving forward, go ahead.
Okay, can I quickly ask a question? So, to my understanding, this kind of sounds similar to what was that company called? Upstart, was it? Where they also
great question. Okay, this is a great question. Go ahead.
Yeah. So the way I was going with this, so they initially run because I'm a FICO investor here, so I'm curious to kind of learn about this. But they do initially run that FICO score, and then if that comes in at a 650, it's not viable to give them the loan. Then at that point, they go into the Pagaya loan or the Pagaya, the Pagaya score, and they try to kind of see if they have other things on their credit history, whether it's rent or whatever the case is, to be able to give them that loan. Are they using a FICO score and then on top of that, including these other factors, or how does that kind of work? Is it just a separate score?
The guy has his own algorithm, sort of like a score, like you said, altogether. And they're different than Upstart, where they don't hold as much loans on the balance sheet. So I don't know the exact number, to be honest with you, but I know Upstart they hold far more on the balance sheet, which to me adds more risk, whereas Pagaya only holds around 3 to 5% on the balance sheet. And another tweet here, and actually, Trevor Heslop this guy knows his crap on Pagaya. So he's kind of my quant, sort of like Wealthmatica for Nick. But Sam, if you can look at this tweet, he talks about the quality of loans at Pagaya. And so I think that's usually typically where people fall into the bear cases of like, are their ABS deals good? How's their borrower quality and things of that nature. But I just like the aspect that sort of like you said, Aria, the difference with Upstart is Upstart takes them off the platform and takes them onto theirs, sells the loan. whereas Pagaya is just a little B2B in the back end that keeps them on the SoFi UI, keeps them on the Bank of America UI, takes the fee. And sort of that's sort of more of what they do, if that answers your question at all. Whereas I know Upstart takes more on their balance sheet. I don't know the exact percentages, but I just know it's far more than Pagaya.
Gotcha. So it's loans, basically.
Yeah. It connects a buyer with a seller, or a loan buyer with a loan seller. Yeah, but it's in the B2B space. I think, but they're newly profitable. I think their profit margins they just hit 6%. They're guiding for 8% next quarter, and they were negative 4 quarters ago.
I'll tell you the reason why the stock is probably going down.
Because
it's a bad problem.
It's worse.
Yeah,
I mean that's why. That was also a macro thesis for me. Partly was rate cuts this year. And looking, I always like to have some sort of financial play. Like I own SoFi for a few years. I just feel like broader terms, fintech is the future for a while. And so I like to play at least some sort of fintech name. And so Pagaya for me was the one I was playing. It's still, again, for me, not going to be a large position, probably 5 to maybe 10%, which for me is not a large position. But I was initially, when I was looking into them before Warsh was announced, which is not official yet. I'm curious to see if that gets actually upheld.
That's what I was saying on Twitter, where it's like, hey, isn't Warsh supposed to be officially nominated? And he is not officially nominated.
Yeah, it's not official yet, which is interesting.
Yeah.
But that was more of my play too. It's like rate cuts, obviously, it's beneficial for Pagaya. But I just, it's just a B2B commerce space. It's like undervalued. I mean, they're going to do, like I said, 1.3 billion in revenue. They're valued at 1.5 billion. They're growing at 35%. Going to be doing 8% profit margins. That'll slowly tick up as well.
Are you talking about net profit margins, by the way? Because their operating margins are at 14% already, trailing 12 months.
I think my net profit margins.
Net profit margins, yeah.
Yeah.
I was talking to, I don't know if you guys know Manu Invests on Twitter, Substack.
Yeah.
By chance, yeah. A good friend of mine, by the way. No, he's really in tune with financials and stuff like that. I believe he has a background in that. So he was kind of looking into the income statement, balance sheet, stuff like that. Kind of just like warning against like possibly using PE or anything like that. Something to do with sort of the loans they hold on their balance sheet, the interest that comes in, whatever the case is. I don't know the full details of it, but I'm not sure, if like PE or anything like that would be good to use in the future. But even on a price to sales basis, I mean, it trades at like 1.5 times sales, 2 times sales.
Yeah,
something ridiculous.
Yeah, so, something ridiculous.
1.2 times sales. Wow.
they're reflecting profitability too, which is definitely attractive, especially when you think of like Zeta. We're all
100%.
Zeta. That inflection of profitability is really what like thrusts the stock on its flywheel.
And I love Gal Gerbener. That's their CEO. I just love the way he talks and articulates. I think he's super well-rounded. Sort of, he's definitely not like an S-tier CEO, like I would consider like Uber's or Arcady or other ones I like.
Arcady's just the dog, dude. Like that guy he's just like, I remember the earnings call. It was just like, can I just go back to work now? Like, come on.
I loved it. When they asked him like, "Oh, are we in an AI bubble?" He literally scoffed and like, "Oh, he's like, are these guys genuinely serious?" Did an analyst just genuinely ask me that? He like was pissed, and he's like, "No, guys, we're not in a bubble. Stop asking
Russian,
stupid
man.
questions."
He's Russian. He doesn't care. He's like, he doesn't deal with BS. It's funny.
Which CEO is this?
Arcady Volos, the CEO of Nebius. Yeah.
Of Nebius. Okay. All right.
Yeah.
Have you guys seen, by the way, Hims and Hers After Hours?
Oh yeah, we were talking about that earlier.
Oh, we talked about it for a while, dude.
Oh my
Do you know why?
God.
Do you know why?
No, I have no idea.
FDA is coming after them. They named them in their letter.
Whoa.
I know that's pretty bad when the government's going after you.
By the way, I sold that stock. I only had like a 2% position, but I sold it, I think 30 minutes before, or like 45 minutes before the CEO tweeted Antonio Leonardo.
That's hilarious.
Dude, like talk about timing, right? Like it was like 62 bucks, $63 a share.
That's actually around the time I sold it.
See, that's the time I wish I sold it. You guys didn't tell me to sell it. Damn it! Now
I honestly, I didn't even know you were in it, Aria.
Just
I didn't read
2%
it either.
speculative position. Yeah, this is a while back. I bought it. There was that one earnings where they put up like 100% revenue growth, and it went down after hours. I'm like, hey, this is ridiculous. So I just bought a little bit of shares, speculative.
Some chump
sort of
change,
play. Yeah, I made decent money on it, right? But
yeah, we talked a little bit,
great
Arya, but
timing.
they came out with a Wegovy copycat yesterday, and that was immediately a thesis breaker. I sold right away. I'm so glad I did. I sold it like 23.50, something like that. Now it's down to 19. So that always feels good when you sell and it goes down another 25%. But yeah,
it feels great.
They just announced,
great.
like, literally the government is like, yeah, we're going after HIMSS, and they named them in their letter.
Wow.
So yeah,
that is brutal.
because when I saw they named their pill a Wegovy copycat, I was like, they just want to be sued. Like, there's too much risk in the stock for doing this. So I sold out right away.
Like, that's just
wow.
That's just messed up. And they
And
probably
it was
lost
crazy.
a lot of people in the company when they did that too.
The classic, 100%. The classic HIMSS nerds saw that they, in their meta ads, got rid of the ads where they literally described it. They had in the part of the ad like saying, "Oh, we have the exact same ingredients as the Wegovy drug," and then it randomly disappeared. And then 2 hours later, this FDA thing comes out. So clearly, at HIMSS, they knew about this midday and removed that from their ad. And then now we see it dropped after hours, which was, I hate the fact they dropped it, dude. Why do they, like, I feel like, why do they wait until exactly at 4:05 p.m. to drop the news that they're going to come
because
after
the
HIMSS?
people who were shorted
Yes, exactly.
news, or they were paying the media to drop the news. Like it's a game. It's literally like a game.
It's ridiculous.
And yeah, that's what they always do. Like, and Trump and all of his buddies wait to get in after Trump. It's a game, man.
Yeah. Great pull
That's
up.
what the big dogs
That's
do.
what I'm talking about, where they removed that they have the same active ingredients in the ad. They got rid of that.
Wow.
And then boom, this drops. Yeah, dude. And HIMSS investors the past 36 hours, it's been a nuts time. But I'm glad I'm out. Got rid of the headache. For me, it was still only like a 5% position. It probably was like an 8%, but it went down so much.
Did you end up selling at a loss, or you still made out with the gains?
After all of the premiums too, I definitely made a profit, but I sold the shares out at a loss. But I still cover calls because it's so volatile for a year and a half. I've owned this since $16. But averaged up a little bit, and then sold the shares at a loss. But I definitely, in total, probably was up a little bit, but not enough to where I'm happy. I was, when they came up with the copycat drug, I was pissed. I was like, "Are you seriously doing this again?"
That was like literally just yesterday, which is crazy.
Yeah. Here's the craziest part. If you look at the chart, it was up 20% pre-market off that news.
I saw that.
It shot up to $28, and I was like, why is this up? It clearly was the algos just saw GLP-1 and HIMSS and decided to try and buy.
Hold
on. Was that Alexa?
But that was his Wi-Fi thing coming in.
Oh, okay.
But yeah, man, it was up 20% at like $28, and then now it's going to hit 18s probably, which it hasn't been in a year and a half. Insane.
So do you guys believe this bounce or no?
Ooh, you mean macro?
Yeah, just the
whole
macro. Do you believe the bounce or no?
Ooh. If I was a betting man, no.
I don't believe it.
Yeah,
I mean, I don't think it's going to drop straight down, but like, I don't think this is like the massive reversal people were waiting for.
No, I agree with that. I think I was saying, like, in my Discord and stuff like that, like, I don't know, maybe December, November-ish, I was saying like, oh, we should probably be seeing like a decent, not bear market per se, but definitely like a solid pullback first half of 26. We've yet to see it with the indices. I mean, software has been obliterated. But yeah. Kind of crazy.
That's an understatement.
Why were you thinking we should have first half of the year just have a pullback?
I was looking at the chart. No, I'm joking. No, I was. No, not really. I've been recently trying to get into it. I was DMing Sam a little bit about it, but no, I don't know, dude. Like, I just saw like a couple stocks kind of roll over. Netflix in particular. If you look at like the 2020, the 2022 bear market, Netflix was kind of the first one to go. When like, you know, coming out of the summer, we saw Netflix continuously decline a little bit. That kind of tipped me off a little bit. At the same time, like Spotify and stuff like that. Those are some of the earlier tech stocks to kind of get into again, not bear market per se, but definitely like a solid pullback. Again, you can see right there on the Netflix chart, it started to kind of roll over in August-ish. Same thing in 2021, right? And then the other Mag 7 tech stocks, whatever you want to call them, FANG stocks, they also typically roll over a couple months after that. That Spotify, couple of these sort of companies, I don't know, just intuition, not anything methodical.
I agree with you.
Yeah.
I agree with
No, yeah, it makes sense. I mean, we've had an insane bull market for 3 years.
That
so
too.
I think it totally, it makes sense. Which I would welcome. I would love a bear market. It's been a long time.
To be honest, I'm not a big patterns person. I actually literally just saw this on the weekly chart of Nvidia, but like 1, 2, 3, right? So
Yeah.
that just stands out. But I'm more of like the moving averages, exponential moving averages.
See, I don't know anything. You guys are speaking gibberish.
I mean, this
I'm just
this
straight
is
fundamentals, and that's it. I don't know anything, TA.
I mean, fundamentals is good, but like entry and exits is much more
Yeah.
important because that's what you're trying to make the money off, right? But
Yeah.
this was like, this is the nastiest Amazon candle I've ever seen.
Dude, it's
right?
insane.
This is ridiculous, and it's still closed down red, right? So
because they had a share offering, right?
Huh? Oh yeah,
They
a
had
mid
some
shelf
share
offering. They don't want to
offering,
disclose it.
share
So
offering, yeah.
it's probably like $50 billion or something.
What,
And
we think
or
they're
it's going to
going
be
to acquire
more.
someone? What's going on? I mean,
No, they need to
no,
fund their
CapEx,
CapEx.
dude.
Yeah,
Just for
they're free
CapEx,
cash flow
okay.
negative now. They were
Holy
running free cash flow, so they have to fund their capital investments. $200 billion, like that's
yeah.
it's no joke.
Did you see? I tweeted. I was like, they're funding the next Death Star. Did you see that?
I wouldn't be surprised if they do, dude. Let's actually see here.
Yeah,
Nice.
no, it's Amazon. It's my biggest holding. Well, actually, not anymore. Actually, after this drop, it's what's it called? No, dude, you're gonna have to scroll down for a while. ASML is my biggest holding now. Yeah, if you just search Amazon.
Did you tag Amazon?
Yeah. But
Yeah.
The second moon, this one?
There's another one. But then there it is.
Hilarious.
Yeah, I mean, bring it on, man. As long as Jeff Bezos stops selling, I'm down for that. Yeah, dude. I don't think the market's gonna fall off a cliff. I think it's gonna be more of chop what we've seen. But I mean, I'll do this some other time because I do it sometimes in my streams where I talk about technicals and I talk about the fundamentals, and that's what you got to do. I feel like in this market, or that's what I do, and it works very well in my favor. But I mean, if I'm just looking at this chart, right, SPY looks fine. This is fine. It's bouncing off the 9 EMA on the weekly, right? And then if you look at the daily, like this is a complete save, right? You want to stay above these moving averages, and look at this candle today. Like, how many times have we bounced off the 100-day moving average? The orange is the 100-day moving average, and we haven't visited it since May after we bounced off it. And since then, we've been staying above it, and then we bounced off it in November, and we bounced off it yesterday, right? So it's like it doesn't want to fall off a cliff. But the problem is that 50% of the entire stock market are mega caps, and the Qs is just all the way down here. Even after this massive rally today, it's still under all the moving averages. Like, that is super bearish. Even on the weekly chart is breaking down for the Qs. It's already under the 20 weekly moving average, and it's almost below the 21. Right? We're not too far away from the 200-day and the Qs. We almost visited it last night, because last night we were right here, right? And we were so close. I thought we were going to visit it, but we didn't. And that was like a bullish reversal in the middle of the night.
I mean, what do you think this week was about? It had to be margin calls, right? I mean, it was insane. The move.
Yeah, it was margin calls. People got liquidated.
Right?
They had to have gotten liquidated yesterday, and that's why it fell off a cliff after hours. Because
I mean, I've seen IREN go down 25% after hours. But
that was absurd, and that was one of the trades that I did last night.
Dude, it made like a 45% move in the matter of like 2 hours. Like, what are we talking about here?
That was that was an amazing trade.
Yeah, look at that. 28 to 44 in like 8 hours. 55% move. That's insane, dude.
A move like this, like, that's scary, because I don't think that's the bottom, right?
No, I don't think so either.
I think it's going to be brutal. Even on the IREN chart, it's still
typically a bottom happens off of news, right? Like, we got nothing this week,
no news.
nothing today,
no
news. It's just random moves.
Yeah. I think the number one thing to undo all this is if he says like he's not going to nominate Warsh.
100%.
If he doesn't nominate Warsh, which is a possibility. I mean, I've been looking at this stuff like a friggin' hawk the last few days. I've been posting about it on Twitter. So these are the poly market odds, right? And 95.6%. Okay, it's pretty much going to happen. But like, look, this was 99.7% on January 30, like a week ago. But more importantly, if you look at the volume, this was $43 million of volume just less than 48 hours ago for Judy Shelton. Now it's $57 million. There is a lot of money moving in and out of these contracts. This doesn't mean that there's $57 million worth of contracts here. This just means the amount of volume, right? Like a stock chart, the amount of volume. And look at Warsh. They are trading Judy Shelton. And I was reading online that like there's like a lot of big money buying Judy Shelton on here, right? And Judy Shelton is not a hawk. So if that happens, if I hear that he's picking Judy Shelton, I'm gonna buy whatever I can again, because that is like a buy everything moment. But I don't mean to bore you, Arya. Like I do a lot of trading. So, but yeah, I mean that will be the best news we could possibly get. If Iran, you know, I'm sorry that stuff's happening, but like the market is just like, it's over it, right? I think this is the topic for the market. Like they want to know what's going to happen with the Fed. And ultimately the Fed is really what dictates liquidity, expansion, and contraction. And I think that's ultimately the reason why software stocks are selling off, because if you tighten liquidity from the Fed balance sheet, you're not buying bonds on the open market. That means banks are not getting free money or printed money. And that means that debt becomes more expensive, and software companies take out debt, a lot of debt, especially ones that are in high growth, high money borrowing mode. And this is the reason why the Nebuses, the Irans and stuff are extremely volatile, because there's so much uncertainty around fiscal policy, monetary policy. And look, if you shrink the balance sheet, these stocks will go down a lot, right? So
I agree.
It's the story. When I say these stocks, I'm talking about like the intensive debt taking companies. And the problem now is that you have a lot of the circular investing with OpenAI. And on top of that, a lot of these mega caps are issuing debt. Like the last time we saw this, guys, was 3 years ago. Yeah.
I was going to say 2000
we saw it. Well, 2000, yes, but like in 2022, like so there were some companies that are issuing debt. Like we have not seen this in a while, right? And the cap is through the roof. Like I don't know. Like this is a very weird time to be in. But I don't think it's going to be a bear market. I just think like markets just got to cool off for a minute, right?
Yeah.
It's like chopping whatever, and defensives are working. Like Procter and Gamble is up. Heinz ketchup is up. Coca-Cola is up. Like these like Dollar Tree, Dollar General, like these defensive stocks are up. Like the market is telling you right now that we are rotating defense right now, and it's been working. So,
wow, Pepsi is up. Pepsi, growing 2% per year, is up 25% over the past month.
It's a defensive stock.
Yeah,
so, it's a super defensive stock. That is unbelievable.
Yeah,
wow,
so that's kind of scary. If you look at the XLP sector,
they grow 2% a year. That's hilarious.
Yeah. XLP is at all-time highs. Defensive.
Actually, matter of fact, Nate, I don't know if you saw the Fiscal AI page tweeted it, but they are not growing in terms of volume. They're actually declining in terms of volume. It's all price increases supporting that little bit of revenue growth that they have.
That's insane. Yeah.
So I mean, it's super. I mean, it's literally declining, right? It's a super defensive name.
Oh yeah, Philip Morris is near all-time highs. They actually hit an intraday all-time high today.
That's a bit of a growth stock, to be honest with you, with the Zins, right?
I mean, realty income is up 15%.
Yeah,
they have one.
Right now. You know, the market's telling you what it's doing right now. It's showing its hand, and you know, it's we need to have something change soon, because this is not. It's a rotation. It's a broadening out of the market, which isn't all bad, because even the equal weight SP 500 is at all-time highs. You know, like so.
Yeah, I just
fall off a cliff. I don't think
so.
For
me, I feel like Trump cares too much. Well, he's got an ego, but I think he cares too much about the stock market. Whereas under 2022 was Biden. I don't really care so much. I feel like Trump's going to do everything he can to keep the stock market afloat.
Yeah.
And so I agree. I don't think it's 100% guaranteed Warsh is assigned Fed chair. That's in May, right? When they officially choose. I mean, I know it's to go through Congress.
Well, he hasn't officially nominated him. I thought
Right.
he did. He did not. He just posted it on Truth.
Yeah, he just posted like
Truth Social.
Yeah. Do you think conspiracy theory? Do you think he just poked the bear, see what would happen?
I don't know. I don't know. I don't know if he's actually going to be one or not. And I think that's the only thing you can do to save the market is to rescind that.
Yeah.
And if he does, like, we are going all-time highs on the Qs, like, easily.
Yeah. Warsh is
he's very hawkish.
He's not a hawk when it comes to rates. He will reduce rates, but the market cares about liquidity expansion. So that's a Fed.
Yeah, and didn't he in 2008 say he wanted to raise?
He wanted to raise rates in 2008. He wanted to raise rates in 2016, but so did Powell. But Warsh does not believe in QE unless we absolutely need it. Like, he wouldn't have even done it with COVID because we didn't really need it in COVID. We didn't. So that's a massive shift in monetary policy.
It's very hawkish.
Yeah. It's pretty bad. I mean, it'll be good in the long run, but like right now, it's short term. As Scott Bessent says, and as Stanley Druckenmiller says, like short term pain for the long term gain, and that's the only way to fix it. You got to rip the Band-Aid off.
Yeah. Honestly, I like Liberation Day because it just gave us that 20% dip and just called it the day, and the rest of the year we just rallied. I hate the 2022 just slow grind for like 8 months. I prefer just rip the Band-Aid off and make me lose 20% a day and let's just move on.
Yeah. All right, guys, I got to bounce.
Cool.
Yep. Yeah. Are you in Toronto?
Yeah.
All right. Oh, it's pretty late there, but you stay up late just studying stocks and stuff, dude.
Dude, it's my sleep schedule has been an absolute disaster.
Yeah, you're like, I'm like, wait, hold on, it's 12 p.m.
You're in school, right? Are you in uni?
Yeah.
Is it uni that you're doing?
Yeah, I'm still in university. Yeah,
nice.
Dude, sometimes I'm ripping tweets at like 2-3 a.m. Just what I am.
What are you studying? Doing econ or finance or what?
No. So I'm majored in marketing, but I'm minoring in finance. It is a waste of time. I mean, I'm just literally doing it to kind of have something like to get into like consulting, for example. Like you just need a degree, something business related. Yeah. That's kind of what I'm doing with it. Doesn't take much of my time. That's why I'm able to do all this YouTube stuff and stuff like that. So yeah, nice. Kind of thought process behind it.
All right, I'm gonna end this stream right now. Looks like Steve went live. If you guys want to check out that stream, I actually saw that on there too. So yeah, go ahead and check out Steve. He went live. He's gonna do his Shaquille Milkman. But yeah, hopefully, Ari, in the next meetup we see you. And if not, I think he's going to do a Toronto one or maybe even a Montreal one at some point.
Dude, come to Chicago, guys. He's doing Chicago in May. Come to Chicago.
Yeah, I'll do Chicago. I'm going to do Chicago.
Come over. Sure. Come on. We'll have a good time. Chicago's the best.
Me and Nick will come together probably.
Yeah.
Slightly east of me. So.
Nice. All right, guys. I will talk to you later. Thank you for watching, guys. Go ahead and check out Aria's YouTube. Let me just bring that on here for everyone to see right here. And Nate's YouTube. I mean, a lot of you guys, there's like 21 people on Nate on your stuff. So 24. Let me just bring up yours real quick, Nate. So people, how do you pronounce your last name?
Endicott.
Yeah, I totally butchered that, even though there's like there's
Endicott College.
Yeah, there's Nathan Endicott who's like trying to steal your.
Dude, on YouTube, thunder. I know he's got like 8K subs. I'm like, this guy, what is he?
Yeah, that guy is like he's trying to steal your subs. All right, guys, but I will talk to you later. Take care. Have a good Friday night. Have a good weekend.
Have a good one.